All right, hey everyone. Thank you so much for tuning in here. It's weird. It was like 80 degrees today in Connecticut. Now it's like 50, and they say it's going to pour pretty soon. But anyway, hopefully there will be some good games on tonight. It's kind of weird, right? Like now that UConn's out of it, I don't really care anymore, and that in a lot of ways makes it more fun because it's like you don't have to worry. But whatever. All right. Anyway, I think this is kind of an important lesson here, right? To me, the S&P looks like it's really oversold. Now you might look at the RSI indicator and be like, Mark, why do you say it's oversold? The RSI indicator is not indicating oversold conditions. If it was, this blue line would be below this red horizontal line here. Well, here's the thing. If we go look at the default setting, 14, what this is measuring is where the price is now versus where it was 14 days ago. So if we do a count like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So it's measuring here to here. It doesn't account for this big move up here and this big reversal. It's not that there's anything wrong with the indicator. It's not perfect. Nothing is because everyone would use it if it was. But it's just important to understand that there are nuances in these things and they're not perfect. But if you understand them, they'll make your life as a trader much easier. Trust me. Anyway, big sell off. Where do we find support? The level that was resistance back here, right? You can see resistance became resistance. So this is an important price level. I mean, it broke through it or it broke down for a day, but it came right back. It's almost kind of like a false breakdown. But you got to remember that bottoms are more volatile than tops because bottoms are caused by selling and people being afraid. Tops are caused by people buying that are hopeful, and fear is a much stronger emotion than hope. So, at an important level, oversold. I think there's a good chance we get some kind of a tradable rebound or so over Monday or Tuesday. And I'm going to be putting some trade ideas on there for my paying members. So please check them out. Okay, so yeah, so here's an important thing to watch. Look at this. So this is XLK. This tracks the technology sector. So this is right at an important support level too. Well, of course, it's 30% of the S&P 500, so it's not a coincidence. But let's see here. Yeah, so it's basically the same kind of a situation at support, right? But this support here is much more well defined than the near term support we saw in the S&P. All right, now we're going to take a look at the financial sector. Wow, big reversal there. Here's something else we're going to have to watch. Look at that sell-off. Where did it end? Right, it ended right around 49, and that wasn't a coincidence. 49 has been important for this thing. So far we got resistance and we got technology at support and we got financials at what's probably going to be support. And let's look at the healthcare sector. Yeah, we're kind of neutral here, but again, it's just another example of how you get support at price levels that had been support before. So we're getting close to it again, right? A lot of times when you get to support, you rally. Support's just like a large group of buyers, and sometimes the buyers start to worry that other buyers will outbid them or pay a higher price, and they don't want to miss the trade, so they increase the price they're willing to pay. Other buyers look and see that, and they do the same thing. They don't want to miss out either, and you get this bidding war, which pushes the price higher. So this is why a lot of times when you get to support, you get a rally. We're still like a point or two away, but keep an eye on this. I guess we'll just take a look at the communication services sector here. Ooh, big move lower there. Now, this sector is dominated by Facebook and Google. If we go look at the fact sheet of the ETF that we're looking at here, we can see the holdings of the sector. Remember, we're looking at the sectors. The S&P consists of 11 sectors. So Facebook is like 18%, and Google is like 18%. So those two stocks are basically a third of this sector. So let's see what they look like. I think there's going to be some ideas here, which I will put on my ping site. Oh, yeah. Well, let me kind of just shrew this up a little bit. All right, that's right. That's like right there. That's Facebook. Notice I'm saying Facebook. Whoops. Ooh, look at this. Wow, this could be the trade right here. This thing that gets down another $5 or $6. This former bottom here, really oversold. This is like, when you're an institutional trader, like I was for 20 years, it's like sometimes you give an order out to buy or sell because you got to trade with a broker. They execute the orders for you. And sometimes you're like, take your time, try to get a good, do a good job, get a good price. I'm not in a rush. Don't worry about it. But sometimes you call up your broker, and for whatever reason, maybe you sense there are other sellers in the market. You tell your broker, dude, get me the hell out of this thing, man. Be aggressive. I don't care about the price. I just want out. And this to me looks like panic selling here, which means the market could be getting washed out, which means if we get down to around the level that was support before, there's a good chance there's some kind of a tradable rally there. So that looks pretty interesting to me. All right, I guess we'll just take a look at Bitcoin, and then I'm going to go get ready to watch some basketball. Yeah, I mean, kind of neutral here, but you see the same thing, right? Support of former support levels. If people ask me, like, do you use the same charts for different securities? And the answer is hell yeah. Because when you're looking at a chart, you're not really looking at the security. You're looking at the psychology of the people that are doing the trading. And whether you're a Bitcoin trader, crypto trader, people experience the same emotions. So like just like how Bitcoin here came off of support because you get anxious buyers outbidding each other. The buyers don't want to miss out, so they get into this bidding war. We could look at oil. Now, what's more different than Bitcoin and oil? But if we look at oil, we see the same action. We get to support and we rally. Yeah, I know a lot of y'all did pretty well on this trade. I think it's probably time to kind of get out of it in the short run. But I mean, look at this, right? This isn't rocket science. This stock over the last, 2 years, every time it's gone down to around, I don't know, I guess we'll call it 67. It's found support and it's reversed. It's a really important level, obviously. When I was in business school, we used to hear about all this, like, random walk theory and stuff. And if random walk theory was true, there wouldn't be support level and resistance levels, but yet there is. All right. So I think Google's going to kind of drive the market over the next few days, and we'll be talking about it. All right. Thanks, everyone. I'll see you. Have a good night.